component when you do the bank reconciliation process. Okay, so then we got the employer taxes. On the employer side, we're going to match, in essence, the Social Security and the Medicare for both Adam and Erica. We'd also have the federal unemployment tax, but we're not going to deal with that because it's fairly small, and it does have a little bit of a twist to it, in that you've got that cap. You've got a cap on it that I don't want to deal with. It's a low cap that can confuse things that I don't want to get into at this point in time. Just getting a general idea here. So if we take the totals then of this is what we have to pay over and above. So we'll total that up, and then we can sum it up this way too if we so choose. And I do choose to do that for a double check. So this is what we're going to pay on our taxes. So these are our employer taxes that we have to pay over and above the payroll that we're paying to the employees. These taxes that are right here, these are not employer taxes. Those are not going to be payroll tax expenses because they're not our taxes, even though we're the collection person for those taxes. Those are the employees' taxes that we're required to take from them and pay on their behalf to the government. These are taxes that we have to pay over and above the amount of their earnings that we're basically paying on their income. So then we've got the payroll liability. The payroll liability is going to be increased by the FIT, and then the Social Security on the employer side and the employee side, and the Medicare on the employee side and the employer side. Totaling that up, that's going to be the liability. So once again, what's going to be the journal entry, which we will do next time? We're going to say one journal entry, or we could do it in two journal entries like we saw before for each of these paychecks, or we can think of them as one lump sum paycheck. Would be increasing in either two journal entries or one the expense of payroll expense of the 6983, and then these three of the 1578 would be increasing payroll liability, and then we've got the checking account, which would be going down by the 5405 by these two amounts, but we could report it with one transaction. Then we would also have then the payroll tax expense of these two amounts, the 498, that would be increasing. The other side going to the payroll liability because we have not yet paid these. All we've paid so far is the net check. And so the total liability after those two transactions would be the sum of these items, or the 2076. So that's what we'll then do. We'll use these numbers to create the journal entries next time.